Welcome to Hashtag Value, the show where we fix the formula behind founder finance. I'm Graham Davies, fractional CFO and founder of Edition Finance. Today, I'm joined by David Walton, who's the founder of LumAI. David, could you just give us a 60-second breakdown? What does your company do? Who do you serve? And what problem are you solving?
So, LumAI is a AI-powered booking system that helps experienced businesses. So think companies like ski schools, surf schools, spas, health and wellness venues, paddle clubs has been the latest addition. Those businesses moving away from these outdated spreadsheets and like manual bookings, telephone bookings, in-person bookings. So we're now implementing machine learning to help optimize the scheduling. So do all the heavy lifting as to deciding what to sell, when to sell, considering all the variables when you're trying to sell an experience, things like weather, staff, equipment, resources, supply and demand. We're even now tapping into like Google search trends. So all of these things will then help missed bookings, remember client preferences. This is a really biggie that I'm keen on. This is what I'm calling Loom IQ, which will be a way to hyper personalize customers like learning or experience journey. So essentially, we're solving the complete chaos of a manual booking system that frustrate both businesses and customers. When we think of the variables that are involved in like one of our core business being ski schools, there's around 25 different variables that like a booking specialist who we currently employ, a number of those, they've got to consider those all the time when someone makes an inquiry for a ski lesson. So the big thing for us is if we can solve the variables that we're dealing with, it should be really simple to transfer this into other markets and verticals where the variables you can count on one hand. The biggie is moving actually out of the snow sports industry because there's only kind of what we would define as a ski school. There's only around 8,000 of those globally. But the big markets for us is moving into sports like paddle, one of the fastest growing sports in the world. Health and wellness is our biggest addressable market. So like yoga retreats, health and wellness venues that are attached to like hotel chains. You think anywhere where you need to purchase a ticket to have an experience, and that's what I think my vision on it is, that people are wanting experiences and not transactions moving forward. So being able to provide the infrastructure and the architecture behind someone gaining an experience and making memories.
Yeah, amazing. And when did you start AI? When
Well,
did that?
it was officially founded in February this year, but the ski school businesses that we've got, they were founded in 2018, right? And we've grown to a point where, yeah, we either spend more money on booking staff and continue mashing together all these off-the-shelf systems that we currently have. So we do have, like right now, we've got real-time availability. You can do online booking, but none of the tools or systems properly talk to each other. It's not that automated, and there's like endless workarounds that we need to do. So last pretty much a year to this week, I sort of I had a sit down with my co-founders and said, look, we've got to, I think we need to spend some money here on building a unique system. We can't just continue doing what we're doing if we're going to continue the growth journey that we're on. And I spent a few months just looking at like cost benefit analysis and working out, okay, if we do this just for our ski school business, where's the value add and all of that sort of stuff, and got to a point where I go, wow, this is a huge investment, and it's also an investment that we will continually need to pump. So at that point, I thought we can't be the only ones having this problem. I mean, come on, we've tested like all the online booking systems you can imagine to see if there was something that we could just make work and maybe get to a size where we could then go back to the developers that have those existing systems and say, look, we need to improve the roadmap. These are the features we need. But ultimately it got to a point where the opportunity was too big for us not to have found something that is starting with AI, because a lot of the existing platforms are now quickly shoehorning in these AI features wherever they see fit. Whereas we're starting really with a blank canvas, but also with the owner operator experience that we have and the problems that we see day to day. And we're going, right, well, we can solve these for what I thought was fairly niche for us, but it turns out that this has got a huge potential to solve a lot of problems for a lot of activity-based businesses. with the view now that we build up the system which will help our existing ski schools. So that sort of de-risks the like the immediate revenue that we're searching for, because we will get that from day one. But also moving this like into big picture thinking, being able to then get this to a point where we could sell to a massive tech platform like an Airbnb or a Booking.com that have now doubled down on selling experiences alongside their core business. So, selling hotel rooms or apartments for Airbnb, now you can purchase experiences on their platform without having to get the property. So you go, oh, hang on a minute, this is huge validation that experiences is going to be a game changer.
Really big growth driver for them actually now, isn't it? I think that they've launched that in the last 6-9 months or so, the experiences thing on their platform.
Yeah, absolutely. So the plan is that with speed, and I'm really leaning into speed is everything at the moment, that we'll be snapping up a huge collection of suppliers in the experience world, and being at a point where we know it best that will hold the most value. So then a huge business like that might be very interested in acquiring us in 5-7 years time, something like this.
Funny actually what you said there. You said about there's lots of legacy platforms and systems of things that you could use, but it's almost like usually the incumbent sort of has an unfair advantage, doesn't it? But in this case, I think now that you're building a native AI system, you kind of have an unfair advantage because they can't really switch their system to be AI
Correct.
native. We're building it from scratch from day one. So it's interesting to see how that's going to pan out over the next few years across the board, really. But I think that's a really good advantage you have. You see lots of companies, you're right, shoehorning AI in with a chatbot or something.
No, and at some point, something's going to break that will be fairly significant. And we're like the timing of this, like we mentioned the food business earlier, the timing of that was less than ideal. But the timing of this now, just I've heard many people on podcasts and read many articles around timing being everything. But how the hell do you work out what the right time is? It turns out you feel it. So now I feel like, oh, this is like bang on time now. And it was really hard to predict that with other businesses I've been involved in. But this one now, getting like the right feel, the right product market fit, like all of those things that previously people would say super tangible, like when they all come together, you go, oh, right, this is what it is. And that's maybe a bit harder to anticipate.
Amazing when you feel that timing though. How have you funded the business so far?
Yeah,
David?
good question. So we have I toured most of the UK trying to find like a software developer partner, and like being very pragmatic at this stage to go, what's the cheapest, fastest way to do this without compromising quality below a level that I'm happy with, and settled on an external company, essentially like a subcontractee relationship, and go, right, this is where any money I raise or any money I put into this is only where it's going. So it's been completely initially it was just founder funded. So I put in personal cash to start covering the cost of the MVP build. And then we got to a point where I knew I needed to raise some cash. And at that point, that was when the story evolved to, okay, we're going to move this into now new markets and new verticals. So I started a fundraise in April. So essentially, just to get things moving, again, coming back to speed, I'll just set the threshold being the SEIS cap at 250, which we were eligible for. Within 2 weeks, I got the advance assurance from HMRC. I was like, right, well, let's go and secure that first. So first step was to leverage my existing network. So that was the ski school network, and it turns out friends and family, it's a good place to get money. So within 2 emails out to our existing database. So these are people that I've known for a number of years. They've spent money with the ski school business, so we have a good relationship. Within sending 2 emails, I'd raised about 60% of the target. And
Fantastic.
we come back to talking about that food business where we first met in 2022, where I was trying to digitize the farmers market, and that was like coming off the back of COVID, and that felt like an unbelievable uphill battle to try and get money out of people. I sat down with people like super wealthy people, the founder of Ted Baker, I was on the phone with for 2 hours, and still, really struggled to get anything over the line. And I compare that to this fundraise, where it's like the right thing at the right time to the right people, where the SEIS thing's a massive advantage as well, right? But it just meant that I don't know, I had a call for 25 minutes the other day with an investor, and he was like, "Yeah, done. How much do you need?" And it was capped, but we've split it up into tranches from 150, 25. And he took a 50K ticket after a 25-minute conversation, and so, wow, this is going somewhere. And like all things, I thought, oh, this is too good to be true. And now I'm hitting a bit of a slump. I've got to raise this final bit, which I thought was over the line with the third Ned that we'd onboarded, but some personal circumstances with them, and they dropped out. So this has created a new opportunity to get this final bit raised. But yeah, the journey's been good and challenging. Spent loads more work in getting a really good data room and due diligence signed up, and I think that's why a lot of the investors kind of had all their answers questions. So by the time we got onto a phone call, it was like, okay, I just want to know you now and tell me a bit about you and the team, because ultimately, yeah, the finance models we've got, the data room stuff that we've got, it's all great, but ultimately, which people have you got that are going to execute this? So yeah, after a 25-minute conversation, I managed to get those deals over the line. But yeah, it's definitely not easy. It's the due diligence stuff at the beginning has been a game changer.
That's interesting. That's obviously something that we at Addition as well would always advise our customers to do, is be organized up front, get that data room ready, make sure everything is there, so you can literally just share the data room with someone who's interested in investing in your business, and they have every question answered, every point of detail they could want, really.
Yeah, I think one of the big wins was just a simple FAQ sheet. If I was sat there with my investors
Really
hat on, yeah, and there's around 50 of them on this. So someone that is really wanting to go into a lot of detail with the due diligence, that's like gold dust to them. They can go through that and go, oh, actually, I didn't even think of that question, but that's great to have that answer. So I can't stress how valuable that's been.
Absolutely, and it does depend, doesn't it? The thing is that some investors at this stage won't even look at any of that stuff. They're just not bothered. They just want to get in a meeting with you, talk to you, understand who you are as a person, what you've done. Do they trust you? Do they believe in you? And that's a lot of the time for those types of people. That's enough for them to just invest. And then you get the other side of the spectrum, the others who actually want to go and look at everything: the financial model, the FAQs, the go-to-market strategy, all of that type of stuff, and all the assumptions behind it. They really want to go into it in detail. And so you have to, unfortunately, you just have to make sure you're covered all bases, don't you, at this stage? Because you get all types.
That's a really good way to like departmentalize it. The latter section that you speak of, that's very hard, because you're still at this, for us as well, we're pre-revenue, right? So we're still hypothesizing that, okay, look, this is where we think it's going to go, and here's the, I don't know, pitch deck or story deck, and then here's the numbers that tell that story in numerical values. But the former bit, you say, where we talk about, okay, who's the person leading this, should be, for most founders, that should be the sweet spot. That's the that's where you should be winning most conversions. But the other side of it is telling enough of a story on the deck and the model that, okay, that gives me a warm enough feeling to trust this person. But I think like with all things, relationships seem to be the most important thing here.
Absolutely, yeah. And for those listeners who don't know what SEIS is, actually, SEIS is actually a fantastic scheme we have here. It's in the UK only, but it's for UK taxpayers. It's a tax efficient scheme when investing into startups. So you can raise up to 250K, and you effectively get 50% of that back as a tax credit off your tax bill if you're a private investor, which is really amazing. So actually, 100 grand investment actually only costs you 50K, really. And on the flip side of that as well, if it doesn't work out, I'm sure in this case it will, David, but if it doesn't work out, the investor can also write off that investment for tax purposes as well and get another, 40% off that too. So actually your exposure is really low.
Yeah, it's a game changer of a scheme. I mean, there's definitely no questions that, particularly to investors, that had we not had advance assurance of SEIS, they would have potentially said no, or had way more due diligence being carried out. It's a game changer. And then recently we had the 4 tickets of 150 or 75, 50 and 25, and we're getting loads of interest from friends and families not wanting to put that level in. Then we've offered now some smaller tickets from essentially 0 to 10K, which is SEIS, and some friends that have said, look, we'll put 3K in. It's only costing me 1,500 in the back pocket. I'll do that.
Amazing. Yeah,
Yeah.
it's a really good way of doing a friends and family round, and it's just a fantastic way of doing that. Perfect. So, okay, so you're raising 250 at the moment, then, David.
Yeah.
You're almost closing that.
Yes, yeah, we're aiming to close, although these milestones are fairly flexible. But at the end of this month, I kind of want to draw a line under this first raise, and that will, if we complete it, that will push us to a 12-month runway, and that will feel very comfortable. At the moment, we're kind of at about 6 to 7 months.
Okay, so 250K gives you 12 months of runway.
Yep.
And the big question, which I'm sure you've actually already answered to a lot of your investors, how does this money get deployed, invested? What are you going to do with it?
Yeah, the bulk of it goes to the build or finishing the MVP. If we get to raise more than the 250, then we will be able to accelerate the build. We will pull forward more features and things like that. The rest goes into then preparing for launch and onboarding the users. And that gives us then the ability to make that really, really swift, very quick, get users straight onto LumAI and start making revenue.
Yeah, amazing. So, do you think the seed round or pre-seed almost, I guess, the SEIS round?
Yeah.
Do you think it will get you to revenue?
Yes, yeah, because though this is, I guess, fairly unique here because, well, we talk about non-friendlies and friendly customers, right? We've already got an existing business that needs this solution. So from day one, that business will move on to LumAI. So that de-risks it massively for us because we will immediately be just, instead of paying to the off-the-shelf systems that we are already in that business, that will go straight into LumAI. And then we have a number of friendlies, so customers that are in my network or businesses that are in my existing network that need a solution like this, they will move on to the platform as well. So we've got like a big ability there to get revenue from day one. And then our sort of big challenge will be getting a non-friendly on board for this winter season. So someone that I don't personally know or have a really close connection to, that will be our first big challenge. And that's what we're working towards now.
Fantastic. But I guess once you've got those case studies from the people you do know and they're using it and getting success from the from the product, I guess that will open the doors for people you don't know, won't it? That should be the plan, I suppose.
Yeah, exactly. Like we were talking about earlier, just raising the benchmark or what businesses currently see as this is the minimum we should do to run our business.
Yeah, amazing. And which verticals are you going after first from a customer point of view? Are you going after the winter sports stuff, or actually are you going wider from the beginning?
No, not too wide from the beginning. We will double down on winter sports first. That's the industry, the market that I know best. I know that like the back of my hand. So the timing of that is good now to have the MVP finished before the winter so people can start loading bookings onto it and things. So we will have a pretty big intent with who we're going after for the winter to make sure that we're able to feed back into the system, make updates, bring features in, take features out, and be then prepared for the summer activity market. The main one I'm going after in the summer will be paddle courts. So the management of making reservations on paddle courts, lessons, courses, are the second Ned that joined LumAI, Emma Sheldon, MBE. She's an absolute legend and she's really big in the paddle world. So I'm going to leverage her network and her insight to move into paddle and complement the winter sports with a massive summer activity like that.
Yeah, fantastic. And it's a good timing. So your MVP should be ready then just before the winter, I guess. So you're talking about maybe September time when your MVP is ready.
Exactly. If we get to raise a bit more, then we can just essentially spend more money on DevOps team to speed that up. But yeah, that needs to be done before the autumn. I mean, as our ski schools are open all year round for reservations and bookings, so speed is everything now. The quicker we get hands on the MVP, then better for everyone.
Yeah. The question that I'm going to ask you next comes up a lot from all founders that we work with and advise when they're raising is, what should I value my business at when I'm going out to raise money? How did you approach that, David? Yeah. How did you valuation exercise?
Oh God, I mean, I've spent so many hours, probably days, like going backwards and forwards. And we can talk through all the theoretical methods of valuation, and there's loads out there that you can learn, and or you can get someone with expertise like you to go, oh, come on, can you just do your thing on this and value it for us? Or you can go, right, where do I see the value in the business? What am I comfortable with? What am I prepared to sell it for? Ultimately, I think it comes down to I'm looking at a valuation that's fair, it's transparent, and it's justified, and it's what I'm comfortable with. So that was the end goal, right? The outcome. So I did all, I think, most methods that you have available to you. So we did looked at a combination of like, okay, this is the projected revenue, so we'll chuck a multiplier onto that, and different levels of multipliers. So we do revenue multiplier approach. We look at other businesses, so using market comparables, existing legacy booking platforms, what are they currently valued at, and you'd be surprised they're valued really highly and they've got no AI. So we looked at that, then looking at the value that bringing in machine learning and AI into this industry, how do you attach some kind of tangible value to that? And then, of course, the markets we're going after, what's the total addressable market size, and how much are we then going to penetrate into? And this now starts sort of dovetailing into the finance model that we keep changing. And I started this, then I settled on a range. I was all right, it's going to be between this and this. This is what I feel like, okay, this is a good place to start based on all of that stuff. And then it changed when I got these two Neds on board, because I cannot keep the same valuation if I've got these two like big hitters coming into the team and the valuation doesn't change. I feel like from day one, as soon as they joined, the conversations we were having, that's immediately giving me value. I'm going to put the valuation up. So we had the likes of Chris Porter, who founded 6.6 and sold it to Accenture. He's our acting CTO. So him and I having really great conversations with the developers just immediately changed the pitch entirely. So I bumped the valuation up when he joined. Then when Emma Sheldon MBE joined, do I have to keep saying MBE? Do you know? Would someone's got? Can you?
No, I don't
I need to ask her that. But yeah, it takes up a lot of oxygen every time I introduce her. So I'll check.
Time, because you're just gonna one time you're gonna forget and be like, oh no, I forgot to be.
Yeah, I'll check with her. But certainly, if I ever get an MBE or an OBE, that will be essential. I'll always have to be introduced.
Everyone has to say MBE.
Yeah. No, but then when she came on board, and she was, she's a great soundboard for me, mentor. She's going to help with, well, she is helping with fundraising, and importantly, going into the paddle world, the valuation's got to go up again. So got to a point where, this personal value add bumped it up. So then we all then agreed, right, this is now pre-money valuation. Very happy with that. And then we go. So I think there's a point where you can theorize and get to a point where you ultimately just got to be comfortable with it, that it's transparent, it's fair, and people are ultimately prepared to give you some money for it.
Yeah, exactly. Yeah, that's the thing. You can cut the numbers a million different ways here, can't you? But ultimately, it's what is someone willing to buy in at, and what are you comfortable giving away at such an early stage as well? Because what you don't want to do is give away too much. And I think often I hear of some founders, ended up doing a pre-seed round, and they've only got 51% of the business or something, and it's okay. But sort of you need to make sure there's enough skin in the game for you as well, because it depends, right? But you're probably going to raise again in the future and stuff. So I think there's this thing around making sure that you don't sort of give away too much. And we generally work as a rule of thumb as pre-seed round or something. If you're raising a chunky amount of money, somewhere between sort of 20-ish%, 25% of equity issued, if that makes sense.
Yes.
So with a founding team of 75 and new investors of 25, and that gives you quite a good starting point with some equity there. And that's generally where we end on. The reason why we end on that rather than doing, you have to do the financial modelling piece, and you have to value it using multiples and all that sort of stuff, which is important. But at such an early stage, there's just too many unknowns, aren't there? The uncertainties around the execution risk and the fact that the business might pivot and all those types of considerations just mean that you end up just going with, okay, this is the value, kind of like you said. So that sounds like a smart approach there that you've run with, David. That sounds like you've done it.
Yeah,
too much.
The rule of thumb you mentioned there of just give away as little as possible. This information is not exclusive to a founder or an investor. Everybody knows that. And like, you come to those conversations with full transparency. You know, you're trying to give away as little, they're trying to get as much as they can. And you go, well, we've got to meet somewhere in the middle. So it's like, yeah, relationships, understanding, transparency, and go, look, I'm coming from the mindset of I'd rather have a small piece of a big pie than all of the small pie, right? Yeah,
Exactly.
without
Definitely.
being
It's a balance, isn't it? It's really, and
yes.
obviously that's the hardest thing, isn't it, to land that balance. And on that, I mean, maybe it's too early for you to know, David, but is your strategy longer term around financing and funding here to go down the route of venture capital later, at a later stage, or do you want to build a business which is like largely bootstrapped from here and becomes profitable? And what's the plan? Because you hear a lot around now businesses that can supposedly with AI, you can build a $10 billion business with 5 people. Because
Yeah.
AI, etc. I don't know, but that remains to be seen. I don't think you can, but let's see. Well, that'd be great if you can.
I'll let you
Um,
know in a year. Yeah.
yeah, exactly.
The
What are your thoughts around future fundraising and how you might approach it if you do?
yeah, it's a great question. I think you'll be able to help me with this because this is still TBC and we're considering all options. And I think first, this is where I'm looking for some support with as well.
Yeah,
First, I think we need to agree on why we would VC or why we would bootstrap. So what's like the criteria or the parameters here? And
yeah,
I think speed ranks very high. So if speed means we get ahead of everyone else, we get LumAI in front of more users, and in order to meet that criteria, if that means VC funding, then that's a tool that we must use and be open to. So
yeah,
yes, there's parameters that we need to agree on first, I think, and then some controls. So things like, I don't know, writing into the articles of association what the actual social impact is of the business so that people that do start scooping up more equity can't take the business too far away from what it's originally set out to do, which is to help these activity businesses that are seasonal. So
yes.
I think that agree the criteria or parameters around what fundraising tool we are using, and then controls in place. Is there any, what would you say? Is there anything
I think
that
so.
you
I
would
think
lean one side or the other?
it's one of those. I suppose what the first thing is, what's the founders or founding team's desire? Are they doing? Are they building this business to feed their family and to have a lifestyle type business and
Mm,
to you can still build into a really big business, but it'd be slow, right? Are they in it for the next 20 years,
right.
basically, building this thing slowly? Or is it actually they want to build something huge, they want to go really fast? It's like you said, you mentioned speed.
Mm,
That leans more than to VC. As long as the market is big enough as well, and the opportunity and the
yeah.
market size is big enough, the opportunity is chunky enough to make it attractive for VC, if that makes sense. Because that's probably the most important thing. If you raise VC for an opportunity that isn't really chunky enough, you could even sell the business for 100 million further down the line and end up with nothing personally in terms of an exit or very minimal. Whereas you could sell a business if you bootstrapped, you could sell a business for 10 million, own most of it, and walk away with more
Mm,
than if you sold
mhm.
it for 100 million down the VC route. So it is actually an interesting conundrum, but it does I think come down to the size of the opportunity, I think, and the speed element that you mentioned.
Size of the opportunity. So looking at all the markets that potentially would be accessed via this product.
Exactly, which I suppose you've done some of that analysis for your investors, didn't you? You did the
Yeah.
market and things. It does
Yeah.
sound it's a big market, isn't it?
Yeah, it's massive. Health and wellness will be our biggest, and that's what we were playing around with the finance model recently. Like how much penetration do we put into each market, and when do we do that, and then
Yeah,
also how do the pricing tiers evolve? Because it's a SaaS, typical SaaS model that we're setting up here. You know, monthly subscription and then percentage of revenue, and that then also you have to consider the users and how they're growing over time or not. So it's so complicated, and then overlaying, okay, when do we raise? What finance tool do we raise by? But
yeah,
actually, interestingly, just you saying, well, what's your end goal? Yeah, oh
Yeah,
yeah,
exactly.
yeah,
What are you doing? What are you doing here?
yeah, for sure. I'm not doing this to have a small lifestyle business that puts food on the table. No, no, we're doing this to make a huge business that we want to sell to a massive tech giant, or buy one of those tech giants. Yeah, no, maybe that's a bit too far, but yeah,
Oh, yeah.
this business is the sky's the limit, or is there a saying that's better than that? But you get my drift. It's not.
Yeah.
I've
Yeah,
had businesses in the past that have been smaller, lifestyle, really noble causes, but this is the one that we want to really harness this AI wave and make this go big.
the plan is to go big. That's
Yes.
it. There's
Yeah,
no
and actually that took me a really long time to be comfortable with, because there's almost a sense, not embarrassment, but or maybe it is, that you're like, oh, I don't want to seem like this is just a financial angle, but it will be. That will be the outcome and the byproduct of finding the right thing at the right time and selling it to the right people. And in the past, I've not done that well at that, and I have done well at that, but not at a big scale. And this is now like, it seems like all the boxes are being ticked. So then why not be comfortable with going, yeah, this is going to be financially very interesting. I mean, I can't go to a VC and say it's not going to be that commercially interesting. That doesn't align with their business appetite. So yeah, I
um,
think being
yeah,
comfortable with saying that, that's a big
that's
thing.
great. Yeah, I think that's important to do. And I think the operationally or running a business, bootstrap versus VC, I think it just looks very different as well. It's like if you're running a bootstrap business for the next
Yeah,
20 years,
yeah,
there's going to be just times of, first of all, you've got to do everything on a shoestring budget. You've got to be really lean, really efficient. You've got to make things work. Now, AI does enable a lot of that, to be honest. That does help. You can leverage AI
yeah,
to replace maybe in the past where you might have to hire a team of 5 people, where actually now you can use AI to do a lot of that work.
yeah,
But it does mean that you're always thinking about, and I'm speaking because we largely bootstrapped Edition, to be honest with you. You're always thinking about, well, how much can I invest here, and how much can I invest here? How do I make sure I'm good to pay the salaries next month and stuff like that? Whereas if you raise a large amount of money, obviously, it just changes things, doesn't it? It becomes more around how can I deploy this capital in order to move the fastest. So you've almost got, you kind of want to get to the point, I suppose, where you've got more capital than plans, if that makes sense. So you're never really thinking about, oh, have I got enough money to do this or do that or do this or invest in this marketing strategy or hire this CTO or whatever it may
yeah.
be. You want to raise enough money to go for it, and
Yes.
you go for it, build the business the way that you sort of envision the business being. And I suppose that's the benefit of venture capital. The downside and the reason why lots of these companies don't work out is because you raise a load of money, you deploy it all, and then the sort of the thesis you had around the business and why it would work didn't work,
Mm,
and left with there's no cash and a load of people, a load of costs, and not much revenue. And so
mm,
that happens a lot. But that's the risk. That's the game, though, isn't it? I think that's the
yeah.
risk you're willing to take if you go down the VC, if you raise big,
Yeah, and
basically.
I think it's a position that I haven't been familiar with, but I really want to. I want to be in that position, because I've had three businesses, one still going, that have been bootstrapped. I'm very familiar and comfortable being in that position. And then prior to that, working in a family business for a really long time, where the some months you might be, oh, we haven't got any money to pay the staff, or there was a particular point where I had to help essentially asset strip part of the business. We were selling off, yeah, selling off assets, machinery or vehicles, because yeah, things weren't going that well. So I'm very used to, like, even right now with some of the ski school businesses, we had a really awful winter last year because of a load of factors like VAT on school fees, snowfall for the last 2 years,
Yeah.
travel restrictions still being a challenge. And so we had a really bad winter, which has just eaten into cash flow for the summer. So right, like, we're bootstrapping right now still, and that's something that I'm very comfortable with doing. And although it's not that pleasant and enjoyable, being on the other side of getting some funds and having capital ready to deploy, I'm very eager to get to that point, because I know what the other side feels like, and I'm not going to fall into that trap of people saying if you get too much money, then you'd end up not being sensible with the allocation of the funds, using it too quickly, all these sort of things. That's one issue I won't be facing because I know what that's like.
I think that's a really good angle. That's a good that's the benefit of running a bootstrap business before, I suppose, David. You have that. You've gone through it. You know how to do this in a bootstrap way. So when you do actually have the capital, you're not going to just spend it. Basically, you're probably going to
Yeah.
be thinking like a bootstrap founder. Oh, is this actually a good use of funds? It doesn't matter whether the fact you've got 5 million or 10 million sat in a bank
Yes.
account. It's more about, is this a good use of funds? Is it going
Yeah.
to deliver? And sometimes you have to just take a punt, don't you? But that mindset that you have from running a bootstrap business, I think, is going to really help if you go and raise VC. The
Yeah.
only that
Yeah.
you see sometimes is the VC and the board want you to sort of deploy the capital faster, and sometimes if you're more from a bootstrap background, you're a bit more nervous and apprehensive about it. I know I would be. But that's my finance brain. I think I'd probably want to deploy in a very controlled fashion rather than taking a punt on lots of different things.
Yeah, I'd probably agree with that. I think having a good soundboard, so the people that have got on the team as Neds will be really valuable at that point. But having the experience from bootstrapping in the past, I think
Definitely.
is now going to really help this new experience that I'm hopefully about to have soon, which I'm very much looking forward to.
Yeah. Absolutely. Well, it sounds like you've answered the questions to some extent there, David. You probably are going to go down the VC route.
Yeah, I think so. I mean, you were talking earlier about this 500k question, right? And
Yeah.
we're raising half of that at the moment, but yeah, if we've got this like 500k investment,
How would you
yeah,
invest?
that's allocated already in my mind. We put like 200k, 40% of that would speed up the MVP build. We'd be able to bring forward features into earlier phases of the build. Another, probably put 30%, 150k into the customer acquisition. There seems that part of acquiring customers and getting them onboarded in a way that's emblematic of the platform we're building. That's difficult to get right, and you can do it cheaply, but that's their first impression of using the system. So the allocating a chunky amount of funds to that part, I think, will be important. That will get us ready for onboarding users, getting the brand known globally. I think that you can't underestimate the power of that. And
Sure.
then I would push towards team expansion of what we've got left. 150k left, and I'd put 100k into team expansion. So this would be under the guidance of me and the Neds. I could do with sharing some of the hats I'm wearing, because we're bootstrapping. I'm doing everything, and that has a shelf life. I've found that shelf life in previous businesses. I'm aware where that line is. So team expansion would get 100k, and then I'm left with 50k, which would go into like beefing up our infrastructure, getting our operations and governance and the tools that we use, beefing those up. So yeah, I could quickly deploy that capital.
Yeah.
I wouldn't be worried about where that's going. I think that would be a sensible place to be.
The 500k question as well. That's a relatively small amount of money. And if you're building a business like yours as well, isn't it? So
yeah, that would go very quickly.
it would go very quickly. Yeah, exactly. That's when you're into. Actually, you probably need to raise multi millions really to get this, to realize the vision you want to realize.
Yeah, that's
Okay,
got
so
to be
sure.
the Series A on our fundraising journey is going to be multi-million one. That's what I'm preparing for now, and envisioning that in a year, 16 months.
Okay, and on that basis, then I guess what the target really should be getting paying customers, getting a sort of go-to-market plan strategy that works and is somewhat predictable, I guess, so that when you go raise that Series A, actually it's a bit of a no-brainer. You're basically going and saying, well, actually, if you give me 5 million, I know I can deliver X amount in revenue. With some, you can't, obviously you're not going to get to the point where you have certainty, but that you have a good idea. I think what I see is a lot of time with founders raising when they haven't quite figured that out yet. So they haven't figured out how they're going to acquire customers and what that strategy looks like, and then you end up spending the money on figuring that out. Whereas you can actually figure that out with a smaller budget first.
Yeah, that's exactly where I'm at right now, is working out a blueprint for this plan. So I have, we've got the go-to-market for the winter sports pretty much covered off now, but I know where the big upside is into health and wellness and that arena. So I'm redoing the blueprint for that so that we get to a point where you just press play when the cash comes in, and we're not then using the cash to go, right, is that the right message to send to the right people at the right time? We're doing all that now.
Brilliant. That would really help. That's going to help massively when you raise your Series A, if you have all of that stuff.
Yeah, Sintra is helping me loads at the moment because we're bootstrapping it, and I can't spend money on people. I've got Sintra doing loads of work for me, which has been a game changer. There's got to be a way we can actually integrate that into LumAI. I like the bot character feature. That's very cool. But yeah, I'm using that a lot to help. Do a lot of research and development and come up with like stress test different plans, and that's. I mean, there's three things we're spending money on. One is Sintra, one's Google Workspace, and software development.
That's great, though. You're running it very lean. That's really, really good. It sounds like you're really onto something here, David. It sounds like you said the timing is right now.
Yeah.
And previous businesses, maybe it wasn't, and it was harder to get people interested and raise money, etc. Whereas now, you're really onto something at the right time. So, and the thing that you're doing, which is obviously everybody, this gives you stronger conviction as a founder as well, I think, because you're solving a problem you've experienced and created, and now you've created a business to solve that problem. So I think that will probably give you plenty of conviction for a number of years to go and build it.
I've got 3 quick fire questions, if I can
Please.
Your brain.
Oh yeah, please do. Yeah.
Just to finish off customer acquisition there, so it's B2B business, right? Vertical SaaS model. What strategies do you think we could employ to acquire customers quickly?
Oh, here we go. That's a good question. So you're B2B SaaS. However, you are probably selling. Your customer probably is like a small independent business owner, right? You're not going after the big chains or big players, or are you?
Yeah, we are. So the 4 levels. Enterprise will be like a big chain. And then there's the premium, which will be kind of the like 15 team members plus, 800 plus K in revenue. And then there's the pro version, which sits between 500, 800K. And then there's basic, which is the lower tier, which could include freelance people, but we need high volume. So the pricing model is weighted currently, and the finance model for pricing is weighted at like basic, we aim for 10%, then pro is 20%, premium, that third pricing tier, will take 40%, and then enterprise, the top tier, will take 30%. So when we change the weighting of that massively changes, revenue, valuations, all of that sort of stuff. So that's been quite hard to work out what the right thing to do there is.
The ticket or the selling price of the enterprise is going to be significantly more than your freelancer pricing, isn't it?
Correct. Yes.
But I think the strategy for the enterprise would definitely going to be more people-led, business development type conversation. You probably need, that's going to be more sales-led, I'd imagine, than it is marketing-led. I think enterprise probably less. They don't necessarily buy. Marketing is obviously really important to them, and brand and things for those people. They see something and they remember it. But actually building relationships and actually selling, so sales-led approach to enterprise, in my mind, would probably work better than, say, investing in Facebook ads or something, if that makes sense, or even LinkedIn works quite well for awareness, though, I think, for those enterprise, because those enterprise players are probably going to be on LinkedIn because they're in a corporation. That's probably where they spend a lot of their time when it comes to sort of social and things. Whereas at the other end of the spectrum, the freelancers, that's probably not going to be sales-led. Like, I don't think they're going to have a BD person calling out to build relationships with them. And why would you? I mean, the value in that customer is so much lower. You really want that to be more automated. You probably want that to be more kind of a bit more sort of B2C in terms of your getting in front of them on their social channels, Instagram and things, and they click and they buy and they sign up online to a free trial or something, and then they put their details in a week's time. So those lower end, I think that's the strategy that would work. And this is just my ideas, by the way. I don't know whether this actually will work. And then at the other end, the enterprise, I think, would have to be more sales led, and that would be more people, and you'd have a team of people probably
Mm,
working with these deals that probably take 3, 6, 9, 12 months to get over the line, maybe even longer.
mm.
How does that align with what your thinking is?
Yeah, interesting. This like the sales cycle is something we need to consider deeper. The enterprise customer is currently taking 30% of the potential revenue. That's what we're allocating towards that customer. So it seems like we need to be looking at that a bit deeper. If the sales cycle is going to be 12 months, they're going to be on they're going to be fairly sticky to their current systems. And
Yes.
yeah, this is a challenge at the moment, because you could weight it towards the basic end, and those people have a really low benchmark in terms of the current tools and systems they have. But then we're going to need like tens of thousands of that customer for it to be commercially interesting. We could have a number of the enterprise ones, but a longer cycle. So there will be some kind of sweet spot that we'll need to find, and that's something I've got to work through.
The strategy for the two is just different. It's almost like two businesses.
Yeah.
Doing the same thing, but it's almost like two businesses. Yeah.
That's a good way to frame it, actually. When we do expand headcount and have teams, this will be a really good way to have it framed that they are operating more independently, because they are completely different customers.
Exactly.
Yeah, that's interesting. Okay,
and of course, that enterprise thing is that's where the value is, but it's just going to take time to build, isn't it?
Mm.
For example, with this pre-seed round, if you just focus on enterprise, I don't know how big those enterprise customers are, because that's also a spectrum as well, isn't it? But it might take you a year just to get one. You might get two or something. And this is why lots of startups, even though their ultimate end game is at selling to enterprise, they just start at SME level or level, because the sales cycle is just quick. It's like someone sees it on Instagram, they click, start free, off you go. And then you can get that sort of like product-led growth kicking in, where you offer a free trial, they use it, then they sign up, sort of thing. Well, and at least that demonstrates traction.
See, I'm not just a finance man.
No. See, I'm a marketing person as well. I don't know about that. No,
yeah, those two things are so interconnected, aren't they? You can't have a huge divide between how the numbers are stacking up and evolving over time, and the go-to-market plan, and then the marketing strategy. Those things have to be so interconnected.
To be interconnected, yeah. And of course, if you try to do too much all at once, then you end up not doing anything. You kind of want to focus on just like one thing. Like maybe it's just, okay, for now, I'm just going to acquire those independent operators or something, or I'm just going to go enterprise from the beginning.
Yeah, right. And just be prepared that we're going to need some capital in the bank for the runway, and hope that lasts. Well, not hope, but have some kind of plan to make that last.
Yeah. But what would I do if it was me? I think I'd probably go after the SME stuff first, the smaller business. Get a bunch of those signed, which is what you're doing already, David, isn't it?
Yeah, that's what we
get validation that way, and then your Series A could be maybe
enterprise.
Yeah.
That's interesting.
Food for thought, though. But we can
last one, if I can.
Yeah, please.
So we talk a little bit about bootstrapping versus when to raise.
Yeah.
What should I consider as a way to be able to answer that question in time? So when to raise versus continuing bootstrapping? What should I be considering in order to answer that question?
So in order to answer your own question about whether you should raise VC or bootstrap, I think the key there is, you mentioned this earlier, speed. I think that's really important, especially now. If you think, actually, do you know what, you could spend a couple of years building some features out, or let's say a year building out a couple of new features for this product before you can get that in front of customers, then maybe you continue bootstrapping. If it's like the customer's asking for this now, we have finite resources. We know customers want this feature. We've talked to them about it. They really want it, and we know it's going to generate revenue. We have finite resources. you need to raise then, basically. You just have to, don't you? If you
Mm.
want to go quickly with that conviction, I think that's the key thing. So speed's the big one.
Mhm.
Uh,
Yep.
and the other one is, I think it's a real personal question. And I think to date, that's what maybe why I haven't raised VC. Um, it's just because I think I valued whenever I had a job before, I always felt like constrained. Working for somebody else, I wanted to be
Mm.
free. I wanted freedom to go out and work on what I wanted to work on and build really cool things and not have anyone to
Mm.
answer. And I sort of always thought if I go and raise from a VC for whatever idea I had, any sort of business, I sort of feel like I just end up with another boss again, really, because I told them I was going to do X, Y, Z. They gave me a bunch of money. Now I've got to do it. I'm on the hook for it. And I can't
Yeah.
change my mind because I've just signed up to a 5, 10, 15-year journey.
Yeah.
Investors, and now I've got to deliver that. And so for me, it just gives me that sort of feeling of having to answer to others, I suppose, rather than
Mm.
I want on a daily basis and doing the thing that I want to do that keeps me happy and motivated.
Oh yeah, that's a whole different perspective.
Yeah,
The lines between what's right for you as a founder and the business owner, what's right for the business, what's right for the users, the end customer. Yeah, I hadn't
it's
really
true.
thought about that being the relationship
Now,
in that.
I'm sure sometimes the business really warrants venture capital because
Yeah,
really good product, it's in a great market. And if the founder has that mindset, maybe the founder's slowing it down. But I think that you have to sort of be led by the business and the opportunity as well. If you're, and you haven't
yeah,
raised it, it sounds like you want to. So you're led by the
yeah,
size of the opportunity, the speed of execution, and wanting to really build something enduring and big, right? So
yeah.
I think if that's what you want to do, I think VC is a really good way of doing it.
So we can, yeah. So it sounds like we can agree on some guiding principles, if you like, for this. And going right, it's the founder, what they want, the outcome of the business, speed is a big thing we've talked about,
Opportunity,
and what's right for the business. Yeah.
business,
Okay.
exactly for the business itself. And I think if you do raise VC, you are sort of then doing it for the business. It's about the business, not about the founder, isn't it? You're doing it because the
Yeah.
business
Yeah.
deserves that opportunity.
Yeah.
It's not about what the founder wants, and the founder's there to serve the business. Really, it. Sort of changes.
Yeah. Yeah. That's custodian of the business,
Yeah,
and if that means you need the key that's got loads of cash, then you take that
it's
key.
not. Yeah, it's not the business serving the founder; it's the founder serving the business. Really, and
Yeah.
it's a shift, sort of a mindset shift. Any other questions, Dave?
No, that you answered my third one in our discussion, but no, that's
Yeah.
great. I've got plenty there to go and be busy for the rest of
Likewise.
the day.
Yeah, thanks so much for sharing so much about the business and your journey. And it sounds really cool. I really
Oh,
appreciate
thanks
you
very
doing
much.
that.
Yeah,
I
it's
really,
been great. It's been my first. I always thought I had a face for radio, so I guess podcast is that. So this is cool. It's my first experience being a podcaster or a guest. I'm not actually a podcaster, am I? That's you. I'm the guest. Yeah,
oh,
yeah. It's been
yeah.
cool. It's really
Well,
good.
yeah.
Yeah, thanks very much for having me.
No, thank you so much. And let's definitely chat because I want to just, yeah, stay in touch and, and,
Cool.
and follow you on the journey as well and help if I can in some way. Love to.
Super. Thanks very much, you guys.